Check here on this market. We're off 74 points now on the Dow. A lot of that is being attributed to the weak consumer sentiment number that came in and just some reluctance really in the market right now as people are gearing up for really the second quarter earnings season, which is underway, and they expect more results coming out next week. Meantime, the dollar's reign is being scrutinized at the G8 summit in Italy, France joining China and calling for a more diverse international currency system. In our Call the Wild, where exactly is the dollar heading, and how should you be positioning your portfolio right now? We have Paul Schatz, president of Heritage Capital, and Peter Bookvar, equity strategist at Miller Tabak. Wonderful to see both of you on this Friday.
Thanks, Trish.
You know, Paula, I'll kick it off with you because you don't seem to be so positive overall on the dollar right now.
No, I'm very positive on the dollar.
Oh, forgive me. I must have had Peter and you confused. Peter, is that you?
Yes, that's me.
Yes, that's you. Forgive me. You say that this is a dollar that's a big problem, that we're going to continue seeing weakness. Why is that? Is it a lot related to the debt levels we're taking on?
I think as long as policymakers have this idea that whether it's monetary policymakers, fiscal policymakers in Washington, that they have to constantly do something to fix the economy, that means printing more money, borrowing more money, and spending more money. And at the scale that they're doing this, it's constant daily debasement of the U.S. dollar. The dollar's been in a downward trend since the late 60s when the dollar index was formed, and we're only 11% decline in the dollar index from an all-time record low. So investors have to protect themselves in this environment over the next few years.
Okay, Paul, I want to get over to you now because, of course, you're the opposite on this one. Peter just outlined some very good reasons, and there's a lot of concern right now that the U.S. government is not doing enough to really prop up the U.S. dollar and keep it strong. You don't think so? You think, in fact, it's going to continue seeing, or rather start to see some upside?
Yeah, no, first of all, yes. The dollar saw I don't want to say a generational low, but a major low in March of '08. And I think that low is going to hold for many years to come. Listen, we all know the government is printing money. We have an economic problem. But if that's the case and the markets look forward, why hasn't the dollar been absolutely decimated? And I think it's because deflation remains a problem. We've vaporized tens of trillions of dollars in credit, and the feds around the world have only replaced it. Well, I say only like it's so easy, but they've only done about $10 trillion. So we're still not even close to equilibrium.
Well, you know, a lot of people say the reason we haven't seen a total decimation of the dollar is, yes, people still think the U.S., when it comes down to it, is the best place to be. That said, I mean, this is a dollar that's still struggling. Why do you think we're going to suddenly see an upturn?
First of all, I don't think it's take the intermediate term picture. I don't think the dollar is struggling so much. I think it's had a normal, healthy, and expected pullback. If you ask me right now, where's the dollar headed in the next month to 3, 4, 5, 6 months? Sharply higher. I think the dollar index, if we're lucky enough to get one more pullback, it's the pullback you buy to have the move of all moves.
Paul may be right. You know, Peter, I got to challenge you because with a lot of bad policies coming out of Washington, one would think the dollar would fall. But look, here's the key point. Take a look at the money statistics. You got new numbers out last night from the Fed. The Fed has stopped printing new dollars for 6 months. It probably doesn't show it. 6 months they have stopped printing new dollars. That has had a phenomenal effect because this stock market correction with gold and energy and commodities and industrials is a deflationary correction. The Fed is changing its policy without announcing it. Somebody's got to put that on the table.
Do we still have Peter and Paul with us? Because I think I want to know just exactly what do I do as an investor given each of these scenarios. Peter, what do you buy? How do you really maximize strength as you believe it's going to be, or rather weakness? I'm getting Peter and Paul mixed up here today. Weakness in the U.S. dollar.
Well, let's look at gold. We've had this massive deflationary debt crash. We had the worst economy since the 1930s, and gold is $100 from its all-time record high. That in and of itself is sending a message.
But it hasn't
Oil
moved.
is at $60.
It hasn't moved
It's
in
probably
3
one of the
years,
best
Peter.
performing assets. Well, it's probably one of the best performing assets since the highs of September.
Years, Peter.
It's $100 from record highs. Oil's at $60. Remember the world we used to live in when oil went from 20 to 30, 20 to 30, and went to 40 because we had a war? It's now at 60. Corn is 50% above its long-term trend.
Okay.
Inflation is there. It's a process. It's not an event. And just because it's not raining doesn't mean the clouds aren't coming.
And Paul, real quick over to you. How do you play it?
Very easy. Number one, Ridex has currency shares. You can short the euro, FXE, which gives you short exposure, means the dollar goes up, that goes down. Both Ridex Pro funds have bullish and bearish dollar funds to play, and then Power Shares has ETFs to play as well. Bullish dollar positions, bearish dollar positions. People should not play currency futures here. Play the ETFs or play the mutual funds. Much easier.
Okay, some good ideas from both of you. Peter and Paul, my apologies.
And where's Mary?
I know. We got to bring Mary in. Thanks. You guys have a great weekend.
You too.
Melissa, over to you.